you're in your 50s, you're worried about not having enough money in your pension. I've got some research on what you can do about it. Save this video for later. This comes from Which Retirement Guide and from Money Week. First of all, according to Which, you'll need £305,000 at the age of 65 for a comfortable retirement, but most in their 50s have under half of that. So what are the strategies to turn that around? Let's look at those. And like I said, save this video. 3 strategies. 1, adjusting your pension to higher performing funds, because you're still relatively young, you've still got a bit of time. That can help your pot grow 40% faster. There's some calculation numbers done by Which, also done by Money Week. You don't want to take crazy wild risks, but if you're in a default workplace pension, or you look back at your pension performance over the last 5 years, and given that 2023 and 2024 were 2 of the best stock market years in recent history, if you've barely budged, then you already know you're doing poor performing funds. I prefer exchange traded funds because those trackers are a lot cheaper, and I think they're very much more efficient than actively managed funds. Secondly, delaying retirement. I know it's not ideal, by just 2 years can boost your pension back to 20%. Why? Because the tax man is still going to pay you the tax back on the salary you're earning. Once you stop working, you're not getting that tax back from them. So not only are you earning, but you're also getting the tax back. Okay, so it's tax-free working. A bit like going to Dubai, but staying in your home country. Number 3, using tax-efficient drawdown can significantly increase your retirement income as well. You want to keep those drawdowns tax efficient, and you've got to allow for the fact that anything you draw down, if you are not then growing that capital, depleted capital in the pension at a sufficient rate, then of course it's a negative. So you do want to make sure you're in the tax bands and how much you're allowed to draw down, but don't draw down just for the sake of it because you can. What you want to do is keep as much money growing and compounding in a tax-free vehicle as a SIP or an ISA for as long as possible. Next thing you want to do, call to action. Go to the links in the bio, alpeshpatel.com/links. If you want to learn more about investing, I've written 18 odd books. You can download some of them from that link. We've got a free pension review, which we'll do for you. Also on that link, free daily updates on my free Telegram channel, also on that link, and a free investment course, whether you're in your 50s, 60s, or in your 20s, to learn about investing. I've written 200 columns in the Financial Times, and you will get the insights and wisdom from all of those on that link, alpeshpatel.com/links. Thank you.